What's going on, everyone? Welcome back to the channel. Welcome back for some trade recaps. So today I'm just going to go over my short for NNOX, my only trade for the day. Last week I didn't trade very much, very minimal. I think I went long on FUBO on Friday, or Thursday, sorry, because the markets were closed on Friday for Good Friday, so happy Easter, everybody. But yeah, I went long on PLTR on Thursday right out of the gates. Basically just bought it on this dip down to 23. So I was defending the 23 level here and looking for a push up back up to 24 or, wherever I could get fills. So I was able to get a nice 50-60 cent win there on most of my shares and then buy again on the dip to the VWAP. So I still held some of my shares here. I think I was in still with quarter size, and then I added back up to almost full size, and I sold into this push up to 24. So I was pretty happy with that. I felt like I caught the whole move, and then I saw the market starting to turn around in this area, and I was thinking of maybe it was going to go longer and I was going to get back in, but I kind of was like looking at it and saw the market was starting to go the other way, so I just didn't want to trade it anymore. And you can see it sold off pretty hard. So it was really just a fact that like over the previous session it had popped pretty nicely. So I was trying to catch that kind of quick pop again out of the gates after this panic sell-off. So that's why I was defending the 23 level, buying and then selling into the rip towards 24. And today, so that was a long trade. So I'm trying to go more long because I find that shorting is difficult a lot of times to get shares and many different things, but like I do like my shorting strategies when I can find them, and when I can get shares I definitely like to exploit them, and that's what I did today with NNOX. So right out of the gates I was very short biased on it, mainly because it basically had this pop and then it hit this double top at 72 and it just started to sell off. And at that point I was like, okay, this thing started at 40, it popped to 72, now it's running back. It was up 50% on the open, so I was like, you know what, let's catch some, or it was up like 40 something percent, but I figured it was gonna maybe pop and then it was gonna reverse, but we didn't even get a pop. It just rejected, it just faded. And I was like, you know what, after I saw this kind of bear flag here and its inability to reclaim the VWAP, I was just shorting into the VWAP here, $59, $58, $59, and holding that short as it pushed lower, covering quarter size into the $55 range, adding again short when it pops into the VWAP, and then covering as it pops. And here was a bit of a panic cover. I was covering because I thought maybe it was going to pop. I started to see some decent volume coming in. So I was like, you know what, I'm going to get out half my shares that I was holding, and or like a quarter of my shares. And then, once I saw that it was looking fine, I just re-added to the short. So here the VWAP is basically my stop, but sometimes I'll get out with like a quarter size to re-add if I see it kind of looking weak. And I did that over here as well. And it was probably not the best move over here because this one cost me a little bit. But at this point, all of these trades are winners. Pretty much all of these trades are nice. This is like, almost my profit target for the day. And then after these trades, I gave back a little bit. So it's like $70 trade here. And then I gave back like 10, 15 here as I kind of was thinking maybe it was going to top here and then reject lower. But it ended up coming back up against me. So I covered and then had to cover again because it kind of faked me out right here on this candle. You can see if you saw it in the 1 minute or even on the 10-second chart, you'll see that like as this kind of went up here, it looked like it rejected here, and then this candle actually opened red and it started going red and it looked really nice, and then immediately like within 5 seconds it popped up above 56 and then gave you this rip here. So then I kind of panicked, covered some of my shares for break even basically, but then these ones were a little bit of a loss, which ended up not being as nice of a trade. But after I gave back that $15, I was like, okay, well, let's see what happens here. I'm going to give it to VWAP and if it looks weak again, I'm going to short it. So as it started to reject on these candles, I was like, you know what, I'm just going to get in here. My stop's the VWAP. If it comes back to the VWAP, I'll give back another $10 maybe, but then I'll get out and I'll be done, still green for the day. But my hope was that, at this level, when I'm looking at it, getting in on this last short here, my thought process is that it's been starting to, move lower. You can see like it started to move up, then you had this bounce. And then it couldn't ever break above this level, right? It never got back to 59. It just kept kind of bouncing but then fading, bouncing and then fading. So at this point, when it doesn't make a new high, when it kind of falls short of this level here and the VWAP, I'm looking to get short and then hold unless if it could break above the VWAP. Obviously I'm out, but I'm holding into this lower move. So as it pushes lower, I cover, and I'm done with the trade at this point. And this was only half of the trade that I'm taking over here because I don't want to give back more than half of my gains on the day. So I'm taking half size positions at these points. So even when I gave up this 15, if I was in full size like I was at the beginning, it would have been like a $30, $40 loss, but it was only a $15 loss because I was only in with half size. And I didn't sell all my positions here. I was still holding some of these, like a quarter of this when I re-added here, right? So it gives me that ability to kind of have some more confidence as it pushes up against me, re-add at the top, but make sure that you're not constantly covering for losses, right? If you're going to cover, you want to cover close to your break-even point, which is what I did here. Because like I said, this was breaking down. It looked like it was going to be nice. It was into like 54. It was breaking down into the 54s, and then immediately it ripped back up to to 56. And so I covered when I saw it hitting 56.24, not wanting to hold through a bigger move, and obviously it ended up hitting close to 57. So then I was able to cover more of my shares at a better price than if it, up here at 57 or 56.50, whereas that's where I was able to get back in short, right? So that's kind of the thought process there and why I was, not wanting to give back too much of my gains, why I was covering close to break even. If this was the first trade, I might have gave it to VWAP and then held it into this dip, which is, the right thing to do, because what you're doing is you always want to have the VWAP as your kind of hard stop, your max stop loss. But especially when you're trading, a kind of VWAP rejection strategy, or you're shorting it below the VWAP needs to be your line in the sand, where if it's able to break above this with any sort of strength, you get out. And you don't look to hold it. But as you can see this downward move, you get confidence shorting into these pops because it never is able to break above the VWAP. And you have this downward trend just forming and holding solid. And as you see here now, it's hitting 52 and starting to bottom out, right? And it might go down to 50. It might go down to 45 even. It might give you a nice trade. But at this point, you can see the volume starting to die off. And at this point, you're probably going to get another pop to the VWAP. So I would look for this thing to move back up to 55 and then maybe short it there if I was looking to get back into this. But for me, I hit my profit target. I'm done for the day, up over $100 Canadian on the day. So I'm completely happy with that. And I'm happy to come back another day and take my profits off the table. Maybe I left some on, like I said, if I would have held these shares all the way into this 51.80, then it would have been a much nicer trade. I'd probably be up $120, $130, but you know what? I'm happy with this trade. And that's the way you got to look at it. You got to be happy with the trades. You can't get frustrated. You can't get emotional about trading. You just need to take the trades you're given, take the money you're given, and walk away. Be willing to leave money on the table because it's always going to happen. And you can see this thing dipping lower, lower, lower. Like I said, it's probably going to go to 50. But am I getting, I'm not going to get FOMO and go start shorting this thing at 51.50. Because like I said, it's probably going to bounce right back up to 55. And like it did over here, if it goes from, 54 all the way to 56, or from 52 all the way to 54, 55, and I'm holding at 51.50, right? That's why you don't want to short at the bottoms. You want to pick and understand that getting in at these tops or these VWAP, rejection levels are the best opportunity and give you the best ability to kind of control your trade with the least amount of loss, or at least the least amount of room for error in terms of once it, you basically have a hard stop. You see the VWAP. If it breaks above it, you get out. If it doesn't, if it holds below it, then you have confidence to hold the trade and to hold for a move lower. Like you see here, if I would have just held these trades here, this 15 or 20 shares that I had from accumulated here, I could have just held that all the way into this dip and been up another $100, right? Been up $200 today. But there's so many times when I've not covered into these dips, and then it starts to consolidate and then immediately bounces up against you, and you're down instead of green. And these are the things you need to mitigate when you're a trader, is the kind of balance between leaving money on the table and overexposing your capital to big losses. And these are the risks of being a trader, and these are also the lessons you need to learn, especially when you're starting off. I know there's not a lot of new traders getting into the trading industry, looking at this as something maybe they want to do as a business or as a side hustle. And it's definitely something that you can do, but it is something that's going to be extremely hard. It's something that takes extreme discipline, and is probably going to be not for those that are lazy or are not able to wait for their trades. And I've learned from that, because I've been lazy a lot of times and just kind of been like, I'm not going to wait for the trade or the setup. And sometimes like this, you get a setup at 9:30, right? You get a setup right off the opening gates, and you're able to make money before 10:30. You're up over $100 on the day, right? But this doesn't always happen, and this is typically not going to happen. A lot of times it's the other way, right? Or you have to wait until you get the right setup. And FUBO gave us a nice setup today, actually, now that I see for a short as well, right? That was a nice short there at 23, right? All the way down to 21. Wow. And you can see, this rejection here, once it kind of breaks above the VWAP and tries to hold but can't, and you see these big candle wicks, there's a ton of selling pressure. And if it breaks down and then can't reclaim, you're shorting this. You're shorting this all in this spot right here. These areas of consolidation, you're getting in short and you're holding, right? And that's why you can see this huge spike of volume. It's because this is a clear short setup. It's clear bear flag, and on the 5-minute chart, that's a bear flag right there. So you see these kind of ways to trade. And like I said, I was going long on FUBO on Friday, right? I went long into the 23s or into the 24s, from 23 to 24, and today it's down to 21, which is why if you're looking to hold these things, you need to look at long-term levels of support and resistance, and also be willing to hold through downward moves. And FUBO, I like it for a long-term play. It's been looking pretty good for the past few months, but it started to dip ever since the end of March. There, it just started to fade, right? It was up to 34 at one point. It was up to 40, I think, right? Or up to $62 at one point. Wow. And then it came back down to earth, right? Wow. But that's the thing, right? Look at these levels, right? Where did it come back down to that time? 25. So you have 25, 23. That's going to be your level. Now 22, $20 is starting to act as support and resistance like you had here. So I would say that, if you were looking to go long FUBO, then this would be probably a decent area to look to buy. But obviously, that's just my opinion. Don't take it as trading advice. Do your own research before you look to go long on anything. But in terms of the overall look at what I see in FUBO, although it's selling off today, it looks like it might be finding a bottom from the big reversal from 62 like I just showed you. So those are my thoughts on FUBO and my short trade from today on NNOX. Hopefully you guys enjoyed the video. Please like and subscribe. Let me know what you guys think. If you guys have any questions, leave them below. And other than that, feel free to check out some other videos on the channel. And I might be coming up with a AMD video. I wanted to do like a one on AMD and FUBO. So maybe I'll probably put out those this week. I'll have some time, and I've been focusing on making some videos for my other channel, Revolutionary Review, doing some like historical documentaries and stuff like that, which is why a lot of times, I used to put them on this channel, but then I decided I was going to start putting them on my other channel, Revolutionary Review. So that's kind of where a lot of my videos and time has been the last week, and why I haven't been posting a ton of videos. Plus, there wasn't a ton of exciting trades for me to talk about, either in the losses or the gains category. But it was still like last week was a green week, but like $20, $30 green. Like it wasn't anything amazing, right? But I was focusing more on that channel, which is why I wasn't covering my trades. But either way, hopefully you guys like the video. Like I said, feel free to check out some videos on that channel, Revolutionary Review. It's more historical and news media kind of, stuff like that. It's not necessarily looking at stocks, but maybe I'll talk about a few things, but it's definitely not. If you're interested in just stocks, then this is the channel for you. But if you're interested in history and, news, politics, and all that kind of stuff, go over to my other channel, Revolutionary Review. Please feel free to like and subscribe that channel as well, and show some love. Anyway, have a great day, guys. Happy Easter, and happy trading.